All right, today we're pulling back the curtain on one of the biggest players in the Ethereum space. We're going to dive into their playbook because what they're doing isn't just about stacking up assets, it's a massive signal for where the really smart money thinks this market is headed.
So let's just start with this number, $14.2 billion. What does a treasury that big even look like? Well, for one company, it looks like a gigantic all-in bet on crypto. That company is BMNR Holdings. That's BMNR, and their strategy is one of the most aggressive I think I've ever seen.
So who is BMNR, really? Well, on paper, they're a digital asset treasury company. But you know what? That description just doesn't do them justice. They aren't just holding assets, they are on an absolute mission to accumulate as much as they can, turning themselves into a true giant of the industry. Let's just take a peek under the hood at their holdings. We're looking at 4.14 million Ethereum, 125 Bitcoin, and nearly $1 billion in cash. But honestly, the most important number on this entire slide is zero. That's their debt. They're running this massive $14 billion operation with zero leverage, which gives them unbelievable power in a market this wild.
Okay, so this gets us to the heart of it all, what we're calling the ETH accumulation playbook. And this is not some passive, set-it-and-forget-it investment. No, this is a calculated, aggressive, and frankly, absolutely enormous bet on Ethereum.
I mean, just to give you a sense of how hard they're going, look at this number, $1.1 billion. That's how much Ethereum they scooped up in December alone. While a lot of people were getting nervous about the volatility, BMNR saw a massive discount and they pounced. And get this, they are nowhere near done. Their publicly stated goal is to get to 6 million ETH, and they're already about 70% of the way there. This isn't just a random shopping spree. It's a methodical plan being executed right out in the open. But they aren't just letting this mountain of ETH sit around collecting dust. A huge part of their game plan involves something called staking. And if you're not familiar, don't worry, it's pretty simple. Think of it like putting your money into a high-yield savings account. You lock up your crypto to help keep the network secure, and the network pays you back with rewards. And for a company like BMR, those rewards are, well, they're staggering. By staking just some of their ETH, they are pulling in $87 million a year. That's pure passive income, over $7 million a month. They've literally turned their treasury into a cash flow machine. So you're probably thinking, okay, what's the endgame here? Well, a little peek into an upcoming shareholder meeting gives us a massive clue about their long-term vision, and it is incredibly ambitious. So here's the deal. They're voting on a proposal to increase the number of shares they're allowed to issue from 500 million all the way up to 50 billion. That's a 100x increase, which, of course, leads to one very important question. Why?
I mean, why in the world would you need that much firepower? Now, your first thought might be, oh no, they're going to dilute the stock to oblivion, but that's not what's happening here. This is about getting ready for success on a scale that's kind of hard to wrap your head around.
It's all about future-proofing. So, imagine a world where Ethereum's price just goes vertical. BMNR's stock price would rocket up with it, maybe to $500 a share, maybe more. To keep the stock affordable for regular investors, they'd do a stock split, just like we've seen with companies like NVIDIA. But to do a big split, you need a giant pile of authorized shares ready to go. So they're basically preparing for a future where they're so successful, they have to make their stock cheaper on purpose.
Okay, so it's really important to understand that BMNR, as big as they are, they're not playing this game alone. Their entire strategy is really just a reflection of a much, much bigger trend. The quiet, steady march of big institutions into Ethereum. You want to see conviction in a single image? This is it. This is the line to stake Ethereum. You've got 1.7 million ETH waiting in line to get in and get locked up, and on the other side, a tiny 128 ETH waiting to get out. That is a 13,000 to 1 ratio of people wanting in versus wanting out. The signal for long-term belief just doesn't get much clearer than that. And we're seeing the exact same story play out with the Ethereum ETFs. Just check out what happened in December. While prices were getting choppy and retail investors were feeling the fear, what did the institutions do? Their ownership went through the roof. This is a classic smart money move. You use periods of weakness to quietly load your bags. So all of this really brings us to one of the oldest and wisest lessons in investing. Especially in a new space like this, you got to learn to ignore the noise and just pay attention to what the biggest players are doing with their actual money. You know that old Wall Street saying, watch what they do, not what they say? It's a classic for a reason. Public comments can be used to mislead, but the movement of billions of dollars, that almost never lies.
And what just happened with Morgan Stanley is a perfect example.
Just look at this timeline. It's pretty telling. On October 10th, a part of Morgan Stanley hints they might kick crypto companies out of their indexes. That creates fear, pushes prices down. Then, for 3 months, the market is kind of shaky. And then on January 5th, while prices are still nice and low, Morgan Stanley files to launch its own crypto ETFs. The very next day, the threat that started the whole thing just disappears. Coincidence? Suspicious? You bet. They talked the market down, then they bought the dip they helped create.
And look, it is not just Morgan Stanley. This is happening everywhere you look. The biggest Ethereum holders, the whales, they're buying like crazy. Bitcoin whales, for the first time ever, they're buying at all-time highs. Tether just added almost 9,000 Bitcoin to its balance sheet, and the new ETFs pulled in over $1 billion in just the first few days of the year. The institutional hunger is real.
So I guess that leaves us with one big question, right? All the data shows that while the average person might get scared and sell, the biggest, most sophisticated players in finance are doing the exact opposite. They're using that uncertainty as their entry ticket. So you have to ask yourself, if they are all buying now, what do they think is coming next?